Hello everyone and welcome to today's daily major markets update for Monday the 11th. Price is still stuck between a rock and a hard place. It's been like that for it feels like eternity. So we'll go over essentially the same charts as I did over the last few updates. That's really all there is to it. So I think the market is now being held hostage by the next CPI or CPE, whatever inflation number, data abbreviation you want to give it, on Wednesday. That will determine the next larger move. So what are those moves? Let's have a look at the charts, shall we? Here we go. Excuse me. Start off with option one. I'm starting off with the bearish option because we're not getting any traction so far on a breakout. So we'll have to consider that potentially the bearish option is in play. And we have here a wave 1 and a wave 2 completed. And we're now setting up for 3, 4, and 5 down to about 3,500 plus or minus 10 ideally. So it's raised a little bit because we moved a little bit higher than originally anticipated for this wave count. Above 39.50, that is the cutoff for this Elliott Wave option. And then we're going to go to the bullish options. Okay, we get a serious warning below 37.30. And of course, this wave count is fully operable below the mid-June lows, or June 17 to be exact, at around 36.40. So we still have the exact same levels. This is the rock, and this is the hard place. Very simple. We're still stuck between this rock and the hard place. On a daily time frame, it will look like this. Okay, very clearly we'll target somewhere around 34.95. Fits very well with 3,500 plus minus 10. 1, 2, 3, 4, 5. So the index is now setting up for a third wave lower. We'll know soon enough that is the case. So far, the MACD is still on a buy. I don't like the fact that RSI is unable to break above 50. So we have to consider this as a very valid option still. Alternatively, once again, we have the ABC setup in play with potentially complex green wave B. Again, a serious warning below 37.40, and we need to hold 36.40. And of course, breakout above 39.40. Same parameters, same rock, same hard place. Okay, and then we get wave A, then we get another pullback for wave B, and then we get wave C. That will look something like this on the daily time frame and get us probably into the end of the year, believe it or not. Yes, we're starting to run out of time also for this year, as we're already in July and almost half of July. So there's only about 4 or 5 months left for trading. Lastly, this is the most bullish option in that we're going to start a new impulse higher. The impulse will then form itself as a leading diagonal. Leading diagonals are also possible for A waves in this larger B wave bounce. So this can still track the A wave as I've shown here. So we have A, we have B potentially, and a C for wave 2, or all of 2 is completed. Similarly here, we need to break above 39.45 to get this wave 3 going. And then we get a pullback for wave 4 and a wave 5, so it's going to be overlapping. I'll move the arrow here because we've now moved in time, but this is originally where I had placed the arrow. That was already beginning of July, so we're now a week later and I can still not elucidate exactly which of these options is the case. And trust me, I've been browsing around the internet and Twitter to see other people's work, and honestly there are possibly 5 more wave counts out there. All of them I think are equally valid, so I'm pretty much sticking to the 3 I'm presenting here. I think these are the main ones. And then if things morph differently, we'll adjust accordingly. But remember, we are pretty much in a sideways holding pattern for now pretty much 1 week, 2 weeks. Okay, we're not almost 3 weeks. We're not gone any further than where we were somewhere in June 22nd, 23rd. Compare that where we are now, almost 2 weeks of not too much of price action. So that always means the Elliott Wave then has several options available, and I'm presenting to you the most likely. As you can see, I'm not presenting the NASDAQ, the Dow Jones, all the other indexes. They are pretty much held captive by the same wave counts. There's no need to show those indexes until we see the breakouts and the breakdowns. Now remember, we had that 50-day simple moving averages thrust based on where the individual stocks are in relationship to their 50-day simple moving average for each and every stock in the S&P 500. And that the long term shows we can either do one leg lower and then we'll have a very substantial rally, or we're going to rally more instantly. It's kind of like 3 versus 2. So the odds are that we can make a lower low first before moving higher. And we've got that option covered right here. This would then be that lower low. It would probably take a few more weeks before we can reach 3,500. Okay, so we have wave 1, which took 2-3 days, a wave 2, which took almost 2 weeks, and then a 3, a 4, and a 5. That can easily last another 2-3 weeks. That will bring us till the beginning of August. Very possible. Now, I'm not a market timer. You should hire somebody else for the market timing, but that is pretty much what we're looking at. Again, we have our clear if, then, rock, hard place scenarios and levels to watch. Above 39.45, the bearish count is off the table. Below 36.40, the bearish count is on the table. Below 37.30, serious warning for the bulls. Very simple. We break above 39.45, we can target 4,200. Okay, for either a large ABC that's going to last several months, or for an initial impulse as a leading diagonal type of setup, which is going to be overlapping, messy going forward. So we need to watch these levels. 39.45 breakout targets 4,200. Breakdown below 36.40 targets 3,500 on the S&P 500. Subsequent price levels for the Dow Jones, NASDAQ, and other indexes will be given as well once we've reached are broken down or broken out. Okay, I'm not going to beat on a dead horse saying the same thing over and over again for all the same indexes. So we use the S&P 500 as a proxy, and once we get the signal from the S&P 500, we can then update NASDAQ and all those good things. Again, the NASDAQ on a breakdown should target somewhere around 10,000, right? NASDAQ on a breakout can target, as I showed you for the wedge, easily 13 to 15,000, but we're not even there yet. We're simply stuck between this rock and a hard place. I can't say it often enough. And most likely on Wednesday, based on the market's reaction to the CPI data, depends on if it comes in hot or not, then we'll know much better which of these Elliott Wave options are operable. In the meantime, from a trading perspective, always have your stops in place, start taking some profits if necessary, those type of things. All right, there is nothing else to it. And then the Elliott Waves will eventually determine what's going to be the next larger move and where then to expect the markets to top and bottom, or bottom, depending on which way it will go, breakout or breakout. That's all there is to it. I keep saying the same thing over and over again. Thank you so much for listening. Take care, trade safe, review the charts, watch for the breakout. We know where we're going. Watch for the breakdown, and we know where we're going. Those remain on the table. Nothing has changed. Take care. See you on Wednesday. Bye.